All right, so you know how everyone always says, like, picture this at the start of a story?
Mm-hmm.
Well, I'm going to say it because it's actually kind of perfect for this one. So picture this.
Okay.
It's Monday morning. It's April 7th, 2025.
Okay.
You're waking up in India,
Mm.
maybe still a little sleepy,
Yeah.
reaching for your phone even before you've had your morning chai. And then, bam, the screen just like screams at you with these headlines. They're all flashing red, talking about the stock market crashing.
Oh, wow.
Not just like a little dip, like
Yeah.
a full-on
You
nosedive.
can't miss it.
Yeah, exactly.
That's got to be a pretty jarring way to start the day.
Right. I mean, just imagine all those people across India,
Yeah.
checking their phones, seeing those headlines, and just feeling that, like, collective shockwave.
Like a ripple spreading through the entire country.
Exactly. A ripple of
panic. I
Yeah.
mean, financial panic.
Yeah. And the thing is, the numbers, like, really weren't kidding around.
Oh, I bet.
So the Sensex, one of the main indices for the Indian stock market,
Mm-hmm.
it didn't just, like, dip a little. It plummeted. It went down by 2,227 points.
Wow.
Closing at 73,137 balls and 90 zia.
That's a huge drop.
Yeah, and the Nifty 50, another key index, also took a big hit. It dropped 662 points to settle at 22,242.30 Z.
All in a single day.
All in one day, just gone like that.
That must have been pretty terrifying for investors to see their portfolios just like vanish.
Oh, absolutely. It wasn't just about numbers on a screen,
Yeah.
We're talking about a massive amount of wealth just disappearing.
How much are we talking? Exactly.
Like a truly mind-boggling amount. We're talking about 13 lakh crore.
13 lakh.
Which is 1.3 trillion rupees.
Wow.
Just vanished into thin air.
That's hard to even fathom.
Right. To put that in perspective, the total market capitalization of all the companies listed on the BSE, the Bombay Stock Exchange, shrank from 403.5 lakh crore to 390.7 lakh crore in a single trading session.
That's like wiping out the value of a whole bunch of companies in just a few hours.
It's almost incomprehensible, right?
It really makes you wonder what could possibly cause such a dramatic and immediate reaction.
Yeah, I mean, it's not every day you see that much wealth just evaporate.
No, not at all.
So the big question is, what was behind this Monday meltdown?
Yeah, what triggered this massive sell-off?
Well, the answer lies not in India, but across the Pacific.
Okay.
It all started with a move by former U.S. President Donald Trump.
Donald Trump, huh?
Yeah, it was a global event that really sent shockwaves around the world, and India definitely felt those tremors.
So what did Trump do exactly?
He decided to impose what he called a reciprocal tax on goods being imported into the United States.
Oh, tariffs.
Exactly. Tariffs, and the thing is, the U.S. isn't just any consumer market.
Right.
It's the largest in the world.
It's a global behemoth.
Exactly. So when the world's biggest shopper starts changing their buying habits or, slapping on these new costs,
Yeah.
it creates a ripple effect everywhere.
Like a nasty economic bug spreading around the globe.
That's a good way to put it. And this move by Trump, it immediately ignited fears among investors.
Fears of what?
The biggest fear was a full-blown global trade war.
Oh, no.
Yeah, with countries retaliating and imposing their own tariffs on each other's goods.
A tit-for-tat situation.
Exactly. And when you have a trade war, the ultimate concern is a slowdown in the global economy.
Right, because it disrupts trade and creates uncertainty.
Yeah, exactly. It's like a domino effect.
Yeah.
One tariff falls, then another and another, until the whole economic landscape is just completely shaken up.
Or like a sudden torrential downpour.
Oh, yeah, that's a good one.
Yeah, everything gets soaked and it happens so fast.
That's exactly what it felt like, a sudden downpour of panic in the markets.
I can only imagine. And it wasn't just a gradual decline either.
No, it was swift and brutal.
It seems like investors were reassessing their risk in a really drastic way.
Oh, absolutely. They were definitely spooked. And to give you a sense of just how intense the panic was,
Yeah.
at one point during the day, the Sensex had plunged over 4,000 points.
4,000 points?
Yeah, that's a 5.3% drop.
In a matter of hours.
In a matter of hours.
That's insane.
It was like watching a cricket team collapse spectacularly.
Ouch.
Going from a seemingly strong position to complete disaster.
Yeah, I can see the analogy there.
And the Nifty wasn't far behind it, tumbled almost 1,150 points, hitting a low of 21,744, which is a drop of 5%.
So both major indices were down significantly.
Oh, yeah, significantly. And it wasn't just the big indices that were affected.
Right.
The broader market, which represents a wider range of companies, suffered even more.
Oh, really?
Yeah, the BSE mid-cap and small-cap indices, which track medium and smaller-sized companies, they were hammered right from the opening bell. Some of them were down as much as 10% initially.
10%, that's a big hit.
Yeah, and they ended the day with significant losses, too. The mid-cap index closed down 3.8%. And the small cap down 4.5%.
So this wasn't just a few big companies taking a hit. It was widespread.
Widespread panic.
Yeah.
Yeah, it wasn't just a few big players. It was affecting companies of all sizes and investors across the board.
Right. It suggests that the concerns were more systemic, not just limited to a few sectors.
Exactly. And speaking of sectors, no sector in India's economy was spared.
It was a bloodbath.
Yeah, it was a sea of red across the board. The metal index was particularly hard hit, losing a massive 7%.
7%, ouch.
Yeah, and the real estate sector also took a beating. The realty index dropped 6%.
So even traditionally stable sectors like real estate were feeling the heat.
Oh, yeah, and some of the biggest companies listed on the Nifty were among the top losers, names like Trent Tata Steel, JSW Steel Hindalco Industries,
Yeah.
and Larsen and Toubro or L&T.
Those are some big players.
Huge companies that are involved in so many different parts of the Indian economy.
Right. Their performance really impacts the overall market sentiment.
Absolutely. And it wasn't just India. This wasn't some isolated incident. This was a global phenomenon.
So other markets were affected too.
Oh, yeah. Other Asian markets were hit just as hard, if not harder.
Wow.
Japan's Nikkei, Hong Kong's China's own Shanghai Composite, they all saw significant declines ranging from 5% to a whopping 10%.
So the panic was spreading across Asia.
Rapidly. And then there was Taiwan. Their stock market crashed so dramatically, it actually had to be halted.
Halted.
Yeah, they had to stop trading altogether because it was plunging so fast.
Which was pretty extreme.
It was a 9.7% drop.
Wow, they had to hit the pause button.
They had to hit the pause button, exactly. It was just too chaotic.
So this was a truly global panic.
A global panic, and it didn't stop there. It spread to Europe, too.
Oh, no.
Yeah, when their trading day began, it was like a slow-motion train wreck. Germany's DAX index plummeted 10% right at the opening bell.
10%, that's huge.
Yeah, and London's FTSE 100 also took a big hit, falling around 5%.
It seems like no one was immune to this sell-off.
No, it was a truly global event, and to really understand why this Monday was so devastating,
Yeah.
we need to go back to what happened just before the weekend.
Okay, so what happened on Friday?
Friday was brutal for the U.S. market.
Brutal? How?
Well, the S&P 500, the Dow Jones, the NASDAQ, they all experienced significant losses, shedding up to 6%.
So the U.S. market was already in a bad place.
It was already shaky, and that set the stage for the global downturn that unfolded on Monday.
So it was like a chain reaction starting in the U.S. and then spreading everywhere else.
Exactly, a chain reaction of fear and uncertainty.
And how did China react to all of this? I mean, they were the ones directly targeted by Trump's tariffs.
Yeah, they didn't waste any time in hitting back, and their response was swift and strong.
What did they do?
On that very Friday, their finance ministry announced a substantial 34% tariff on all goods coming from the U.S.
34%? That's a big jump.
It was a major escalation, and they set the implementation date for April 10th.
So just a few days later.
Yeah, they were making it clear that they were serious about retaliating.
It wasn't just a slap on the wrist. It was a full-on counterpunch.
Exactly. And this is what really spooked investors worldwide. It wasn't just the initial tariffs from Trump. It was China's forceful response that really signaled the potential for a full-blown trade war.
Right, because now it wasn't just a one-sided thing. It was a back-and-forth battle.
Exactly. And the concern now is that this could be just the beginning, you know?
What do you mean?
Well, experts are predicting that the European Union and other major trading partners, they might also implement their own retaliatory tariffs.
So it could become a global free-for-all.
We could be looking at a full-blown economic slugfest, as some are calling it.
With tariffs flying back and forth between countries.
Yeah, it's a chaotic economic battlefield.
What are the potential consequences of all of this? I mean, for everyday people.
Well, the biggest concern is rising inflation.
Inflation.
Yeah, if all these imported goods become more expensive because of the tariffs,
Yeah.
those costs are going to get passed on to us, the consumers.
So everything will become more expensive.
Pretty much, and that could make it really difficult for people to afford basic necessities.
But it would erode their purchasing power.
Exactly, and it could also throw a wrench into economic planning, both for individuals and for governments.
Right, because central banks might have to raise interest rates to combat inflation.
Exactly, and that could further slow down economic growth.
It's a vicious cycle.
It is, and perhaps even more concerning, is the potential disruption to global supply chains.
Supply chains.
Yeah. You know how in today's world, the production of even a simple product often involves components and materials sourced from multiple countries?
Right. The globalized production.
Exactly. Well, these tariffs could throw that whole intricate system into chaos.
Because it adds costs and uncertainty to international trade.
Exactly, and that could lead to shortages, delays, higher prices, and ultimately a significant global recession.
It's like a game of musical chairs where the music suddenly stops and there aren't enough chairs for everyone.
That's a great analogy. It's a sudden and painful scramble for resources and stability.
And not everyone wins in that scenario.
Definitely not. So let's talk about what some of the experts in India were saying about all of this.
Okay, what were their takes?
Well, we heard from Abhishek Jaiswal of Phenomenu.
Okay.
He called the situation in India a spillover.
Spillover.
Yeah, he was emphasizing that the drop in the Indian market wasn't due to anything specific happening in India itself, but rather a reaction to these global jitters.
So global factors were driving the Indian market.
Exactly. And his main concern was the rising inflation and the increased risk of a global economic slowdown.
So he was worried about the broader economic implications.
Yeah, he was. And then we had Trivesh from Strategini.
Mm-hmm.
He really pointed to China's strong retaliatory tariffs as the key turning point.
Right, the 34% tariff.
Yeah, he said, and I quote, "Trump started it, but Beijing's response lit the fuse."
So he saw China's reaction as the real game changer.
Exactly. He saw it as the moment when things got really serious.
And it makes sense because it showed that China was willing to fight back.
Yeah, they weren't going to just sit there and take it. And then we heard from Anand K. Rathi of Mer Ara Money.
Okay.
And he offered a more cautious perspective. He basically said that trying to predict what's going to happen next in this tariff war is like guessing tomorrow's lottery numbers.
So he was acknowledging the uncertainty of the situation.
Yeah, he was saying that the markets are behaving like a recession is inevitable, but he also stressed that things could change quickly.
So it's a very volatile situation.
Very volatile. And his advice for investors was to stick to their systematic investment plans, or SEPs.
SEPs?
Yeah, you know, where you invest a fixed amount regularly.
Right, a disciplined approach.
Exactly. And he also suggested that if you have some extra cash to invest, you might consider longer-term treasury funds.
Treasury funds?
Yeah, like government bonds or high-quality corporate bonds.
Which are generally considered safer during times of economic uncertainty.
Exactly. They're like the safe haven assets.
Right, because they're backed by the government or by solid companies.
Exactly. So even if the stock market is going crazy,
Yeah.
these treasury funds are more likely to hold their value.
So it's a way to protect your money.
Yeah, exactly. Now let's talk about how all of this might affect everyday people, even if they don't actively follow the stock market.
Okay, so what are the real-world implications?
Well, the big one is inflation, like we talked about.
Right.
If these tariffs lead to higher prices for imported goods, that's going to affect everyone.
Because we all buy things.
We all buy things, exactly. So think about it. Electronic gadgets, clothing, food items.
Even things like imported chocolate.
Yeah, all of those things could become more expensive.
So it would hit people's wallets directly.
Absolutely. And if this trade war drags on, it could also affect job security.
How so?
Well, if companies are facing higher costs and uncertainty, they might become more cautious about their spending.
Right.
Which could lead to hiring freezes, layoffs, things like that.
Because it could impact people's livelihoods.
Yeah, and that could have a ripple effect on the entire economy. You know, less investment, less growth.
So it's not just about the stock market, it's about the real economy.
Exactly. It's about people's lives and livelihoods. Now, there was one slightly more optimistic point that was raised.
Okay.
Some experts pointed out that financial markets can sometimes overreact to events.
Right. They can be driven by fear and emotion.
Exactly. Like, remember that whole toilet paper shortage a while back?
Yeah, people were panicking.
Yeah. They were panicking and buying way more than they needed.
It was irrational.
Totally.
Yeah.
So the point is that this market turmoil could potentially stabilize.
If things calm down.
Yeah, if cooler heads prevail, or if the initial trigger loses some of its power.
So there's a chance that things might not be as bad as they seem.
There's a chance, but most experts were still urging caution. You know, they were saying, don't get your hopes up too high. This is still a very serious situation.
So don't bank on a quick recovery.
Definitely not.
Right.
So for those of you listening who aren't directly involved in the stock market,
Yeah.
what should you take away from all of this?
What's the bottom line?
Well, first of all, if you have existing investments, try not to panic and sell everything just because the market is down.
Right.
Remember that markets fluctuate.
They go up and down.
They do. And if you're already investing through SIPs, just keep doing what you're doing.
Stay the course.
Stay the course. And if you have some extra savings and you're thinking about where to put it, Treasury funds might be a good option right now.
They're considered relatively safe.
Exactly. And for everyone, pay attention to the prices of imported goods.
Okay.
They're likely to go up, and keep an eye on April 10th.
April 10th.
Yeah, that's when China's big tariffs on U.S. goods are set to go into effect.
Right.
And that could trigger further developments and more uncertainty.
So it's a date to watch.
Definitely. And who knows what else might happen, you know?
It's unpredictable.
It is. Maybe there will be some other unexpected event that throws another wrench into the works.
The global economy is full of surprises.
It is. It's a complex system with a lot of moving parts.
And we're all interconnected.
We are. So, to sum it all up,
Yeah.
that Monday, April 7th, 2025, was a day of major upheaval in the financial market.
Both in India and globally.
Exactly. It was triggered by Trump's tariffs and amplified by China's retaliation.
Leading to a sharp drop in stock markets around the world.
And in India, the Sensex and Nifty both lost around 3%.
Resulting in a massive loss of wealth for investors.
And the situation is far from over. The global economy is deeply interconnected.
So a trade war between two giants like the U.S. and China.
It can have huge ripple effects.
Affecting everything from stock prices to the cost of living.
It's like we're watching this economic drama unfold.
With unpredictable twists and turns.
And it really makes you think about how interconnected we all are.
Yeah.
How events happening on one side of the world
Can impact our lives in very real ways.
even if we're not directly involved in the stock market.
It's a reminder that we're all part of a global system.
We are. And it's a system that can be incredibly volatile.
So it's important to stay informed and be prepared for anything.
Absolutely, because who knows what tomorrow might bring.
Exactly.
It's a story that's still being written.
And we're all part of it.
We are. Thanks for tuning in to this deep dive into the events of April 7th, 2025. It was a day that shook the financial world, and it's a story that will continue to unfold in the days, weeks, and months to come. So stay tuned.
Stay tuned.